Hello, today is December 5th, 2020. Let's do our disclaimer. At that point, we'll go over our calls and make our predictions. This is my trading plan for Monday, December 7th, 2020. Remember, if we get sharply in the undesired direction, which is what happened on Friday, calls killed before we open. No guarantee I'm right, just doing our best. Trade at your own risk. Here's my email. Look for the pattern with the early low. This is it, and Monday also has the early low. We said Thursday's pattern was quite negative. We looked for lower prices unless we gapped and promptly took out the day's high, and that's what we did. Let's review what we said. Said unless we gap and promptly take out the high of day, we should see lower prices, and of course that's what happened. We had very strong resistance at the highs of the week before Friday's action. We said there was no confirmation till we took out some prior lows, but it looked pretty negative to me. When you've got a very negative pattern and it fails, which is what happened on Friday, normally it fails on grand style. Now of course, Friday's action can fail too because we have to get confirmation by going past the close. If Monday's open gaps under this low, this whole move is rejected and does not count. But for now at least, we've broken through very strong resistance at the prior highs, and when you break through strong resistance, it certainly implies the up move is not over, even though I still think at some point it has to retrace. During the day we had a number of signals that MEJT so were false moves. They wouldn't stick, they retraced, and that's already happened. Well, we have given up on DeMark's indicators. Here they call for a strong sell. It's clearly failed. Just remember, when they fail, they tend to fail in grand style. If you go 3 bars and you're higher, as far as I'm concerned, the signal has failed. We're still way over the upper Bollinger Band for far too long. Normally you don't have much more to go. But remember, nothing's impossible. Down here, you did trade well under it. Doesn't mean you have to stop here. It just means when you reverse, it tends to be a strong move. Here's our channels. The longer you knock on the door of this channel, the greater the chance you're going to break through. Happened here in reverse. We just banged and banged on the door, finally broke through. Here, instead of correcting and dropping under this low, we keep hitting this channel on top of us. Chances are not 100%, but they've increased, and at some point we're going to break through that channel. Well, this isn't the only count, but it's the count I've been using. It certainly hasn't been invalidated yet, but Friday's action's a bit too much for me. Either you reverse promptly or we'll have to look for something else. This is the weekly chart I've been using for quite some time. Doesn't break any rules. Still isn't invalidated. Still is my preferred count, but as we'll see, it's not the only count. For now, let's assume it's the right count. If you switch from the weekly to the daily chart, the A still works, magenta B still works. All this squiggles after I've grayed out because I'm not certain that's right. If this is magenta A, if this is magenta B, and if there is going to be a magenta C, the next target would be where magenta C equals 61.8% of magenta A. It's pretty close to 39.20, maybe a little short, but it's a reasonable target. Doesn't mean it's the only target, doesn't mean it has to work. But what I like about the target is if this counts right, and that's your A and that's your B, that wave C will equal twice wave A right at the same price. So around 39.20, the waves balance. It's one possible target if we continue higher. It's not the only way to count this. This isn't my favorite count, but it breaks no rules. I did have this as 3 and then ABC, and that's wave 5. But this, you can count it as a 5. You can also count it as a 3. The important thing is to realize this wave here is a 3-wave structure, not a 5 as some others have counted it. If that's A and that's B and that's C, you'll see A and C are quite equal at this high. So this whole thing could be a giant wave, red B, and then you could have an A and a B and a C. And the action for this year could be mostly in wave 5. That would certainly explain, better than the other count, why the move has been as strong as it has been. Now there is some overlapping in the count, and I can't really count it as a 5-wave structure. But I can count it as an ending diagonal triangle, which is what I'm leaning towards in any event. And if that is right, you can calculate a target. You can have wave 3, and you'll see 50% is wave 1. To calculate wave 3, calculate wave blue 5 rather, you can set 3 equal to 61.8%, and you'll see 100% would be around 39.20, pretty much the same price regardless of which count you use. Not centering this exactly, but that's, I worked it out, and that's what it comes out to. So around 39.20 something. So we have target of 39.20-ish, plus or minus a little bit, if we continue higher. It isn't a guarantee we continue higher. Again, this move on Friday can still be rejected by undercutting it fast, but if we do continue higher, I think that's a very plausible target. It's not what I thought until Friday's action. Well, Monday's pattern has really low. Doesn't mean you won't gap up. Typically, it's a rally day with a high in the final hour. Only early weakness would turn the table and lead to further weakness in days to come. Market made a valid breakout over very strong resistance, quite strong. All that's needed is confirmation by trading past Friday's closing price. I think it's very unlikely the market will top out on a Friday. It's even more unlikely it topped out in December, particularly on a day which rallied all day long. Normally these things on Fridays follow through into Monday's open. If you gap down smartly instead, of course, it kills the whole idea. I have to erase a lot of what I said. None of this requires us to go up immediately. It implies that regardless of the overbought readings relating to the Bollinger Bands, regardless of the sentiment indicators showing far too much positive sentiment, it implies the rally has more to go. I still think a significant retracement is coming, but seasonal factors could well delay it until next year. Remember, if we gap and promptly undercut Friday's low, it kills up a lot of what I've said. Short term, we have mixed indicators, but they're not mixed by much. It is positive. We hit the low day in the first bar and the high day in the last. It's a positive signal. It's negative a little bit. We have a wall into the close, not the strongest wall I've seen, but it is a wall. It's often followed by gapping down, but it doesn't work as well over the weekend as it does during the week. The most bearish thing I found was that we had a late rally that retraced right after the close. It implies the rally was caused by short covering rather than by people instituting new positions. Can't move all day long right when liquidity dries up to break out to a new all-time high. As soon as the market closes, you give it all back. It implies that serious money was not coming in here. It implies it was people who didn't want to be short over the weekend, waited all day Friday for their shorts to pay off. When they didn't, they just threw in the towel. And then once they were gone, the prices dropped down to what they were. It's a minor blip. All the other actions positive. All we need is confirmation. Monday's pattern has the early low. It tends to be a rally day. We still have to be alert because this can still be rejected. But for right now, all we need is to go a little bit higher, and to suggest for going higher, most likely not by just a little bit. And that's today's call.